This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Guten Tag, buenos dias, morgen, and welcome to episode 214 of the Bitcoin Bulletin Podcast. As usual, I am Chris. However, I am not coming to you from the Bitcoin Bulletin Podcast studio today. If you haven't already noticed by the microphone quality and by the sound of my voice, I am under the weather today, but it is DCA Wednesday, and we stack sats on Wednesday come hell or high water, so I wanted to bang out at least an abbreviated Bitcoin Bulletin Podcast. We'll see how long I can go. I never have a producer, and I certainly don't have one when I'm at home, so I will try and keep the coughing and the cough edits to a minimum. So let's get rolling and see how far I can go. Before we get into the news and do our weekly DCA Bitcoin stack, though, let's take our customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 894,677, and Bitcoin is ringing in about $1,000 higher than last DCA Wednesday at $94,690 per Bitcoin, and that means that every dollar that you convert to Bitcoin today will get you 10 fewer sats than last Wednesday. Currently, each dollar will purchase 1,056 Satoshis. Still really cool that you can get at least 1,000 sats for every dollar you convert. Once we cross back over that $100,000 per Bitcoin block, we'll drop below 1,000 sats per dollar. And we used to get 20 or 30,000 sats per dollar when we first began this podcast. But when we do hit dollar sat parity, that means that that's 10x from here, a little more than 10x from here. That means that those 1,000 sats would be worth $10.56. And when Bitcoin hits dollar Bitcoin parity at 100 billion, which might seem like pie in the sky now, but so did 100,000 not too long ago. And heck, in 2017, 20,000 seemed like pie in the sky. So when Bitcoin does eventually hit the $100 million per Bitcoin mark, that means that $1 will purchase you 1,056 sats that would have a value in US dollar terms of $1,056. Just an insane return for just one single US dollar. So when we do eventually drop below the 1,000 sat per dollar mark, even if we're 900 sats per dollar, imagine turning $1 into $900 in however long it takes, maybe 10 years, maybe 20 years, who knows? But depending how old you are, certainly within your lifetime, I think it's reasonable that we could expect to see $100 million Bitcoin. If you are like me, you kind of believe it's an all or nothing situation. Like either Bitcoin replaces the global economic system. Bitcoin, we see hyper-Bitcoinization where Bitcoin becomes the world reserve currency. Certainly hints at that already with the U.S. establishing a strategic Bitcoin reserve. Other countries potentially jumping in line. Of course, El Salvador was first, but the first major company, the first G20 country for sure, being the United States, was definitely, especially since the United States has the current global reserve currency, the United States jumping in was definitely, that was definitely an event horizon towards hyper-Bitcoinization, in my humble opinion. The point being, one day, just receiving one Satoshi per dollar will be the norm, potentially even less, because if we do see that all or nothing scenario play out where we're on a Bitcoin standard globally, then we'll be talking more potentially $1 trillion or $1 billion at least per Bitcoin. So a 1,056 to 1 return would certainly be in the category of I can't believe you had the opportunity to do that. You got so lucky when people look back at that. So it's a catch-22. It's a double-edged sword. It certainly feels good to see the price of Bitcoin going up because we still currently price most of our lives in US dollars, at least most of us do. Hopefully that is changing rapidly, but while we do, measuring your Bitcoin stack in US dollar terms is kind of natural. And so it's euphoric to see that US dollar price go up. And And then, of course, it also means that we're going to be able to stack fewer sats when we do convert our US dollars into Bitcoin. So, again, as I said, a double-edged sword. Bitcoin's current price gives it a market cap of 1.88 trillion US dollars, still below the $2 trillion mark, but we only saw that on 3 DCA Wednesday episodes, but marching that way again. Now, if you remember all the way back to even before the halving, I believe it was, on this very podcast numerous times, I had said that what to expect in this halving cycle was that we wouldn't really see a major price action until about a year after the halving, something that we're basically just achieved, and that we shouldn't expect the euphoria phase of a halving-induced bull run to kick off until maybe late summer of 2025, with the ultimate blow-off top occurring around October or November of 2025. I still firmly believe that that is in play. It certainly looks like that is the case with Bitcoin coasting back up towards that all-time high, but not really expected to go rip-roaring euphoric until later this summer. But this summer is closing in fast. There's just a few hours left in April. TikTok, depending where you're listening from, it might already be, it probably already is, May 2025. So all of a sudden talking about, August or September is right around the corner. It seemed like when we were talking about the 2024 halving, it was 6 months or a year out, and I kept saying, first we're going to have Halloween, and then we're going to have Thanksgiving, and then we're going to have Christmas, and then we're going to have New Year's, and before you know it, we're going to have the halving. And it happened just like that. It always does. Time marches on, and Bitcoin, TikTok next block marches on, regardless of how we perceive human events. The point being, before you know it, we will be having our 4-year anniversary here on the Bitcoin Bulletin Podcast. Summer will be in full swing, and hopefully so will the euphoria phase of this bull run, if those who are calling for the super cycle are not right, and we are still bound by the 4-year halving cycle for at least a few more cycles. And I don't see any reason why this will be the last halving cycle. But then again, when we had the last halving in 2024, the conceiving of a president establishing a strategic Bitcoin reserve in the United States with SAB 121 being repealed, all those things seemed like distant wishes as well. So buckle up, Buttercup. I don't think you've seen nothing yet. But continuing on with the statistics, for those of you who value your wealth in gold, 1 Bitcoin will currently cost you 28.8 ounces of gold, a little more than a half an ounce more than last DCA Wednesday, even with gold still lingering around new all-time record highs in fiat terms. Of course, gold being a commodity is going to get more expensive when the US dollar gets less expensive or is worth less, just like the price of eggs went up, the price of plywood went up, the price of everything went up, so did the price of gold. And gold maybe performed a little bit better than eggs in the last couple weeks, but a lot of people would argue that's because gold had been repressed and manipulated so long. Since it was a financial asset, it didn't behave as a pure commodity like eggs would, for example. Not too many people having a strategic egg reserve for monetary purposes anyway. For those of you who value wealth in pizza, 1 Bitcoin will currently purchase you 5,295 large pepperoni pizzas from Papa John's. That is 1 pizza every day for just almost exactly 14 and a half years. 3 more halving cycles from now. So imagine how many pizzas Bitcoin will be able to purchase for you, even 10 years from now in 2035, but certainly in 2039 or pushing 2040. I think it was 2038 when Fidelity predicted $1 billion Bitcoin. And so, as I've said in the past, if you did have 1 whole Bitcoin and you wanted to make it your life's mission to try and spend that Bitcoin by purchasing just 1 pizza a day, I think that window's closed. I think the price of Bitcoin will continue to increase fast enough and significant enough that you would never be able to spend it all eating just 1 pizza a day. All right, that metric that has been my favorite, for most of this podcast history. Bitcoin's 24-hour average transaction volume is zooming right along, averaging about 4.03 transactions per second. When we first began the podcast, anything above 3.14 transactions per second usually indicated that we were in the middle of a bull run. Again, that was just observation, not necessarily any kind of transaction analysis. And here we are, solidly above that 3.14 transaction mark, and Bitcoin absolutely on a tear in the last, when measured in the last week or month. Obviously, we have a little bit to go still to reclaim the previous all-time high, but in time, as Christine Lagarde is so famous for saying, "It will come, it will come." Speaking of on-chain activity, the Bitcoin mempool is not quite as full as it was last DCA Wednesday. Last DCA Wednesday, the mempools were more than double what they had been the previous DCA Wednesday. Today, those mempools look a lot more cleared out. Clark Moody's mempool still has 5,936 transactions pending, but that's a lot less than the 29,204 last week. And mempool.space has a similar 5,943 transactions in their mempool. With the much more clear mempools, the fees that it will cost, the minor fees that it will cost you to do an on-chain transaction are back down as well, depending where you get your data. Last Wednesday, Clark Moody's fee estimator was saying that if you had a high priority transaction, it was going to cost 20 sats per VByte to guarantee it was in the next block. I mentioned why I thought that was an overestimation. And of course, mempool.space disagreed with it. This week, though, Clark Moody's fee estimator is saying a high priority transaction should include a fee of 4 sats per VByte, and that if you have a day or longer to wait, a fee of just 1 sat per VByte will still be mined. Mempool.space is saying 3 sats per VByte is all you need for a high priority transaction. At the current US dollar value of Bitcoin, that works out to just 40 cents in US dollar terms. And they're saying that even a medium or low priority transaction should include that 3 sat per VByte fee. The lowest fee they recommend for a no priority transaction is 2 sats per VByte. Again, if you do need to move Bitcoin, it's a transaction that you need to be confirmed reasonably quickly. Make sure you have the most up-to-date data before you try and lowball your fee. And if you can do that transaction when it's nighttime in the United States or Europe or over the weekend, that is when we've traditionally seen the lower fees. I know we're midweek right now, but maybe if you're waiting to open some Lightning channels or consolidate some UTXOs, right now is as good a time as any at just 3 sats per VByte. If you have time to wait, maybe you could try that 1 sat per VByte fee, but make sure you know what you're doing and that you have the latest data, the most up-to-date data before you do, so you don't end up sending a Bitcoin transaction that never gets mined. We are now 427 blocks away from the next mining difficulty adjustment. That's about 3 days from now on May 3rd, if blocks keep coming in at the speed they've currently been zooming in at. Last week, it was looking like it was going to be a pretty significant difficulty decrease, and both sources I'm getting data from today are still showing a significant decrease, anywhere between minus 4.76 and minus 5.7%. So apparently, either blocks have been crawling along, and or miners have been turning off as the price of Bitcoin, when the price of Bitcoin sank a little bit in the last couple months. Bitcoin got all the way down into the 70s. Now that it's back up to 94, some of those old miners are more profitable again, and so maybe they'll get turned back on. Who knows? Again, also, a lot of this is just pure random luck, and we are still 3 days away, so anything can happen in the next 3 days. But currently, during this halving epoch, blocks have been averaging 10 minutes and 36 seconds, obviously slower than the 10 minutes between blocks that the Bitcoin protocol aims for, and hence the forecast, the predicted difficulty decrease. Although the estimated hash rate has gone up 5 exahash, a little more than 5 exahash from last DCA Wednesday. Currently, the 90-day average is estimated to be 830.8 exahash as the power securing the network, when you look at a longer-term average, when you zoom out a little bit, continues to march up and to the right. Before we go to the news, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to contribute value back to this podcast by either streaming sats on a minute-by-minute basis as you listen, or by sending a boost, which is a shout-out via a Lightning transaction. But because it is a Lightning transaction, you are sending value back in the form of Satoshis. And whether you choose to stream sats or send a boost, again, that's up to you. You decide the value you're receiving by listening to this podcast, whether that's just a Satoshi per minute or whether that's 10 sats per minute, or likewise with a boost. If you think you're getting 500 Satoshis worth of value by listening to this podcast, you could choose to boost 500. If you think this podcast has been invaluable to you and you think it's worth 20,000 Satoshis, that's totally up to you. Of course, when we receive boosts, we do read them on the next episode of the Bitcoin Bulletin Podcast, and we have a boost to read today. It's from longtime listener Leggy. Leggy boosted episode 213, last week's episode about the Tulip Mania, And Leggy boosted 2,000 sats and says, okay, now I got it. All in on tulips, ! With a winky smiley face. Exactly, Leggy. All in on tulips. Not financial advice, obviously. Just kidding. And I'm assuming by the winky face, Leggy gets it as well. We know Leggy gets it because Leggy is a dedicated Bitcoiner. And hopefully you and your local Bitcoin meetup are still winning those Bitcoin meetup challenges, quiz shows. I'm a little bit off my game tonight. A lot foggy headed. I did an audio check before I started recording, and I didn't sound like me to me. Of course, you always sound weird to yourself, but I'm assuming you could probably hear how miserable I feel in my voice. But hey, I'm getting distracted. Thank you, Leggy, for the boost. It's always awesome to hear from you. It's good to know that you're still listening and that you're still enjoying the podcast. And thank you to all of you listening, regardless of where you might find yourself. And we have listeners all over the world. Of course, we have listeners in almost every country I could name, but we do read out the top 10 countries where most of our listeners are located. And as usual, those has been the case for the entire history of the podcast, the number one country for our listeners remains the United States, with just a little bit more than half of you listening from right here in the good old US of A. Totally makes sense because I'm in the United States and it's an English language podcast. Seems like a no-brainer. A big chunk of my listeners would be from here. So thank you to those of you listening from right here in the good old USA, whether you find yourself here in Florida, maybe even on the Space Coast where I'm recording this podcast, or wherever you may find yourself. Number 2 is Singapore, and Singapore's held the number 2 spot for a couple of months now after just absolutely bursting into the top 10, seemingly out of nowhere. But a significant number of you listening from Singapore to keep you solidly at the number 2 position. So, apa kabar. Thank you to those of you listening in Singapore. Number 3 remains Germany. Again, Germany's been ensconced in the number 3 position, probably for the majority of this podcast. So, Dankeschön, mein Freunds in Deutschland. Number 4 remains Argentina. Again, been in the top 10 as long as I can remember. So, hola, muchas gracias, amigos, in Argentina. Number 5 remains Luxembourg. Again, Dankeschön, mein Freunds in Luxembourg, or Morian, to those of you who speak Luxembourgish. Number 6 remains Canada, where I'm assuming if you're a Bitcoiner, you're probably drowning your sorrows that the election didn't go the way we were hoping it did. But it was close. And, what happens in Canada really... I know what happens in the United States tends to affect people all over the world, and what happens in Canada is important to people all over the world. But, regardless of what my personal political preferences are, even if I thought this choice was absolute disaster for Canada, it's none of my business. Other than I would like to see the Canadians have the best life and the best economy possible. You get a sovereignty over your own country. And so if that's who the majority of the Canadians wanted to become prime minister, then that's the way it goes. So thank you to those of you listening in Canada in such numbers that you remain the number 6 spot. Number 7 remains our cousins across the pond in the United Kingdom. So hello and thank you to those of you listening in the UK. Number 8 remains Spain. So hola, muchas gracias, amigos in Spain. Number 9 remains our cousins down under in Australia. So hello and thank you to those of you listening in Australia. And number 10 remains Mexico. So hola, muchas gracias, amigos in Mexico. Colombia, I'm looking at you down in that number 11 spot. You're really close to breaking back into the top 10. Maybe if you turn on a friend or family member to this podcast, you can bump right back into the top 10 because you've been loitering at 11 for a very long time, pretty much ever since you dropped out of the top 10. So really close to moving back into the top 10. Normally we only talk about the top 10, but Colombia, you're so close, it would be cool to see you move back in. All right. On to the news. Of course, the news is usually the price, and the price is usually the news. When the price is up, it's all people can talk about. When the price is down, it's all people can talk about. And currently, Bitcoin's worth about $1,000 more than it was last DCA Wednesday. And potentially one of the reasons why, besides MicroStrategy soaking up all the Bitcoin, besides 21 soaking up a couple $1 billion of the Bitcoin, and other countries adding to their treasuries, and the ETFs adding to their holdings. In addition to the OTC purchases drying up, it looks like the Bitcoin available on exchanges has been drying up as well. If that happens, maybe we're getting closer to that supply shock that we love to see every halving about a year to 18 months after the halving. We're coming up on that time frame, so a supply shock would be imminent if history repeats or rhymes. The Bitcoin therapist tweeted out a couple of days ago, Bitcoin supply in exchanges has been in literal free fall since the election. Supply has never dropped so hard and so fast. This has never happened before. And, that's the thing with the halving, the number of freshly mined Bitcoin that are available for miners to sell gets cut in half, and the demand increases. It's simple supply and demand. If you have more people chasing after fewer goods, the only way that the market can seek a fair price is for the cost of the good to go up enough that people are willing to exchange it for fiat or whatever you're trading it for. In this case, US dollars on US exchanges, or euros on European exchanges, etc., or S coins for people that are gambling. But the point being, the amount of Bitcoin available for sale is drying up. And when that happens, buckle up, hold on to your hats. So don't forget, when we were 93,000 when I first started preparing for this episode, that put Bitcoin the 6th largest asset in the world by market cap. Today at 94,000 and our 1.88 trillion market cap, that actually bumps Bitcoin to the number 5 spot, just ahead of Alphabet's 1.859 trillion, but behind Nvidia's 2.412 trillion, and significantly behind Apple's 3 trillion and Gold's 22.5 trillion estimated market cap. Pardon me. That just goes to show how far Bitcoin has to grow still. Because obviously, if it's the world reserve currency, if it's the global store of value, you would expect Bitcoin to surpass gold. You'd expect Bitcoin to tie gold, just if it became digital gold. And for Bitcoin to tie gold, we have almost an 11x in price we'd have to see. And then, of course, for Bitcoin to become the global reserve currency, we'd be talking even more. As a side note, if you've been watching, you probably noticed the price of houses listed for sale has been dropping. I've been looking at houses around my neighborhood just to kind of get a general idea what the comps are, and I've been looking for houses in other cities where I have friends and family members, and I have noticed that a significant number of the listings that I've been watching or that I just saw have had, that's their feature is, reduced 30,000, reduced 110,000, that they're slashing the prices, and that they've been doing so for the houses that have been on sale for a month or so. They've had multiple price reductions. There are a lot of reasons why. And of course, this doesn't even take into account the slew of second and third properties owned by boomers that I mentioned will be inevitably coming to market in the next few years as the boomers pass on, and either the estates liquidate the houses or they pass those houses on to their heirs. Not all of them will be, not everybody is going to want to sell their current house and move into their parents' old house. So it would seem reasonable that since the boomers own the majority of the real estate, a big chunk of that's going to be coming on the market in the next few years as boomers get up in age. But I think this is a tremendous opportunity, because if the price of Bitcoin continues to soar, while at the same time the housing bubble pops and the prices of houses come significantly down, this could be shaping up to be the dream scenario for all of you millennials and Zoomers who've been priced out of owning a home. If you're thinking, I could never own a home, they've gotten too expensive, wages haven't grown fast enough, but that you've chosen to preserve and build your wealth in Bitcoin, if you've got Bitcoin going up into the right and housing going down into the right, when we meet in the middle and Bitcoin passes, that's going to be the opportunity of a lifetime. So I'm very optimistic that all the boomers that have been thinking that they're not going to be able to buy a home, or the Zoomers that have been Generation Z that's been thinking that they'll never be able to afford a home to start a family, this could be the dream scenario for those of you who've been building and preserving your wealth in Bitcoin. The other big news that's making ruffling a lot of feathers, at least on Bitcoin Twitter and on the forums, is the OP return controversy, where there is people have been advocating for removing the limit on the OP and the op return size, predominantly so that they can jam ordinals and inscriptions and second layer solutions onto the Bitcoin Core protocol. And I particularly think Bitcoin is perfect as it is. We just went over the statistics. The mempools are full enough that it's multiple blocks to clear, but the Bitcoin price for a high priority transaction is still just 2 or 3 sats per VByte. We have no urgent pressing need to try and scale Bitcoin and take the risk of breaking something. One of the things that makes Bitcoin so valuable is that we cannot change it. Every little change we make leaves the possibility open that maybe we could include changing that 21 million hard cap. Now, while we probably would never do that in a million years, the fact that we can change Bitcoin as we see fit means that we could, in theory, change that if we really wanted to, and that makes normies worry, and that's not the sort of thing we need to do while we're anticipating a halving shock-induced epic bull run, while we're trying to convince companies and countries that Bitcoin is going to be the global reserve currency of the future. If it ain't broke, don't fix it. Of course, the people that are concerned about developers trying to force their will down the throats of node runners, just remember, as a node runner, you don't have to run the new version of Bitcoin. Node runners are in control of the protocol. That's why it's really good that we have a proof of work system, not a proof of stake system, where you have you are in control of the protocol that you run on your node. It's why it's important that you run a node at home, even if it's just on a Raspberry Pi or an old laptop, because if the majority of the hash power and the majority of the nodes were being run by just a handful of individuals, like it is in certain other shitcoins, then they could just do whatever they want. Like, we had another altcoin, the number 2 altcoin, force an upgrade on their users not too terribly long ago that made it basically impossible to resist it. If you didn't do the upgrade, you were just out of luck. Hodlerado at Hodlerado on Twitter summed it up, I think, rather simply and brilliantly a few hours ago when he tweeted, "Anyone ever noticed there isn't a JPEG of the times in the Genesis block? Just saying." Now, if you remember, Satoshi in the very first Genesis block encoded the headline from the Times, "Chancellor on the brink of second bailout." And if he had really decided that what he thought that Bitcoin really needed was to be a permanent storehouse for JPEGs or whatever random data you want to blow up the blockchain with, he would have included a JPEG and not just encoded the headline. Again, speaking of node runners and the node runners controlling Bitcoin, one of the dangers is that by bloating the blockchain, bloating the time chain, that it will make it more and more expensive and cost prohibitive for average people like you and me to run a node. You won't necessarily be able to run a node on a Raspberry Pi, and you'll need 10 or 20 terabytes worth of space to store the blockchain, or even more eventually if we ever bloat like Ethereum. And then when we're talking about, Amazon Web Service running all the nodes, storing all the blockchain data, now all of a sudden you've taken away the strength that immutability that Bitcoin has, and you put it in a position where there's only a handful of node runners, and that chain security, the immutability of Bitcoin's code, is out the window. Also in the news today, especially in all the financial news, people talking about GDP potentially declining and oh no, stagflation. Well, the Federal Reserve tweeted, and this is the official Twitter channel of the Board of Governors of the Federal Reserve. They tweeted some good news, because all the news I've seen about the Federal Reserve is that the Federal Reserve is going to be put in a pickle because they don't know whether to raise rates or lower rates because we've got stagflation. Side note, the potential contraction in GDP is almost 100% reflective of the fact that we've cut all this wasteful government spending and we've laid off useless government bureaucrats. And during the Biden administration, when they were touting all this new job growth, if you took out government jobs, we actually had negative job growth for the entirety of the Biden administration. So the Federal Reserve, at least, is acting in a positive manner when it comes to Bitcoin, tweeting, "Federal Reserve announces the withdrawal of guidance for banks related to their crypto asset and dollar token activities and related changes to its expectations for these activities." I believe we spoke about this on the last DCA Wednesday episode, but this tweet came out the day after that, so maybe I'm just mistaken. But this is cool because we've spoken on numerous occasions about how there, previous to the Biden administration, there were numerous large banks that had hired Bitcoin engineers, Bitcoin developers, and blockchain developers to launch Bitcoin-related products for their customers. And then when SAB 121 came along, the FDIC and the Federal Reserve issued guidance saying banks couldn't touch the stuff for the 10-meter cattle prod. We saw all those projects that were getting ready to launch just go away. And now with SAB 121 being repealed and the Federal Reserve removing their guidance, towards the expectations of banks when it comes to crypto and crypto asset and dollar token activities, that we should expect to see more of those banks dust off those projects that they had simply mothballed and start to roll them out, which means Bitcoin adoption. Maybe not all of it will be wonderful, but it will be just a sign that the Overton window has fully shifted and that that Bitcoin isn't just a niche asset anymore. Okay, but back to the GDP, and I kind of put the cart before the horse on this one. Yahoo Finance's headline today was shrinking GDP and elevated inflation put the Fed in a tough spot. I spoke about that a little bit already, but Caitlin Long put this into perspective when she tweeted this morning, that stock futures are down 1% on the news that cuts in government spending caused a decline in GDP shows how upside down the world is. Government spending doesn't grow the economy, despite what misleading Keynesian measures like the GDP show. Team Trump should stop reporting GDP. It's a trap. So, GDP is BS, and it reminds me of that joke that there's two economists walking down the street, and the first economist sees some dog poop on the sidewalk and says, I'll give you $1,000 if you eat that dog poop. And of course, he eats the dog poop. So the other economist gives him the $1,000. About a block later, they see some more dog poop. And so the other economist dares the first economist to eat the dog poop for $1,000. And so he does. So he gives him the $1,000. And then they say, wait a minute, I just gave you $1,000 and you gave me that $1,000 right back. We both ate dog poop, but neither of us are richer. And then the other economist turns into him and said, yeah, but GDP went up by $2,000. And that's the sort of Keynesian nonsense that Caitlin Long's talking about. But I digress. Bitcoin doesn't care anyway. One other thing I saw breaking last night was that there was reported that the city of Roswell, New Mexico, famous for UFO conspiracy theories, is now famous for becoming the first city in the United States to adopt a Bitcoin strategic reserve. I think this is a tiny bit misleading. It's cool, don't get me wrong. If you're from New Mexico, shout out to the 505 or whatever area code it is now. Back in the day, 505 was all of New Mexico. I'm a big fan of the people and the culture of New Mexico, not a big fan of the government. We call it the land of entrapment for a reason. But what it appears is that we've got some plebs in Roswell who donated Bitcoin to the city of Roswell, and they agreed not to spend it for at least a year or 10 years or until it's worth more than $1 million. And they seeded them $3,000 of the Satoshis and published a QR code for more people to contribute. Not a big fan of giving Bitcoin to the government, even if they promise to use it as a strategic reserve, especially in New Mexico. I don't know anything about the mayor pro tem of Roswell, but I do know I lived in New Mexico long enough. I have enough friends and family in New Mexico that I have seen that in New Mexico, the law is very gray. No bid contracts, I think, are illegal in New Mexico, and they still get done. The Rail Runner, which is the train that runs from Albuquerque and Santa Fe, should have gone out to competitive bid. It didn't. It was built at over budget by, I believe, like the governor or the governor's brother or something along those lines. And I don't have that story specifically in front of me, and it's been a decade since that happened. But the point being, money gets misallocated in New Mexico all the time. Politicians, whether it's in cities or states, have incredibly sticky fingers, and it would not surprise me if they find an emergency use case to spend this Bitcoin, especially if it pumps, let's say Bitcoin doubles, let's say Bitcoin 10x's just in the next couple of months. Maybe it will, maybe it won't. But let's say it does. The politicians are the same everywhere, but especially in New Mexico, will find a reason to steal that money to go back on their word. And hopefully I'm wrong about that, because I really, really do envy the ingenuity of you plebs in Roswell. Hats off for you. Hats off to you for trying to orange pill your city. I would love to see Bitcoin fix New Mexico. Maybe this is the first step in doing that. Hopefully, I'm just being paranoid. But, in a previous line of work, we had a phrase called rational paranoia. And it means, yes, you're acting paranoid, but you have a good reason to do so. And in this case, maybe it's PTSD from all the BS that I've lived through in my years in New Mexico. But hopefully I'm wrong. And this is just the beginning, because it is really cool that we now have at least one U.S. city with a strategic Bitcoin reserve. So hats off to my New Mexico plebs, especially those of you in Roswell. All right, on to what makes today and every Wednesday so special, and that is that it's DCA Wednesday. I've already gone on about as long as my voice can carry, so we're going to get on to our DCA purchase. If you're just joining us and you don't know what DCA is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. For example, we set our equal portion at just $20 so we could show that even if you're just a humble pleb and only have as little as $20 to invest a week, that it will eventually add up. Of course, if you are a Michael Saylor type, this is a you do you thing, but I wanted to show even at a humble $20, you can still build an appreciable stack of Satoshis. Our regular interval, of course, is weekly, every week on Wednesdays. This is going to be our 197th stack. We started stacking all the way back on July 28th, 2021, and stacked all 196 Wednesdays in between then and now, converting a total of $3,920 at just $20 a time. See how fast, in less than 4 years, all of a sudden, if you think $20 is a lot of money, then $3,920 is really a lot of money. So things add up fast. And that $3,920 is built as a stack of more than 0.1 Bitcoin. 10,615,573 Satoshis, to be exact. And by not trying to time the markets, by simply being in the markets and the dollar cost averaging regardless of price, we have bought those 10 million sats at an average purchase price of just $36,926.88, significantly less than half of what its current value is. This is going to be the last DCA Wednesday we purchase using Cash App, as I spoke about the last 2 episodes in a row. Starting at midnight, Cash App is more than doubling their fees for purchasing Bitcoin. They were already one of the most expensive ways to stack Bitcoin, and by doubling that, I'm just not going to use them anymore, and we'll probably be using Strike next Wednesday, but I have to figure that out between now and then. But in the meantime, for this last stack, we're going to use Cash App, partly because I have a significant amount of money on Cash App still that I haven't had time to move off of Cash App, and because I have a few other sats on Cash App that I want to add to before I send it to my hardware wallet. So I have Cash App open. I've got the money on Cash App, so it's just a matter of tapping Bitcoin, tapping buy, entering that $20, tapping confirm, and boom, just like that, we stacked another 20,632 sats. That brings our stack up to 10,636,205 sats. It also increases our average cost basis by about $116. So our average purchase price now is $37,043.29. Still not too shabby considering Bitcoin's ringing in. Well, what did we just pay? We just paid $94,755 per Bitcoin. So definitely more than double what our current average purchase price is. And as I mentioned, I don't think you've seen even the all-time high for this cycle yet. And when Bitcoin, we're just a couple $1,000s away from retaking that $100,000 mark. When it does, this stack will have a US dollar value of $10,636.20. Not too shabby considering we've now converted $3,940 into a stack of Bitcoin worth a little over $10,000. When Bitcoin retakes that $100,000 mark and surpasses it to go on perhaps as high as 1 million this cycle, maybe not next cycle, who knows when, but eventually it will. And when it does pass the 1 million mark, our current stack would have a US dollar value. I hope that didn't blow anybody's ears out. I don't really have time to edit this out too much to remove those coughs, but I'm going to try my best to make sure this is a listenable episode. At 1 million, our current stack would be worth $106,362.05, an insane return for just $3,940. And when Adam Back's $10 million Bitcoin prediction comes true, not if, but when, our current stack could be worth more than $1 million, $1,063,620.50. Of course, Fidelity's director of global macro at Fidelity Investments, Jurian Timmer, said back in 2022 that they predict by the year 2038, one Bitcoin could be worth $1 billion US dollars. If and when that happens, our current stack would be worth more than $100 million US dollars, $106,362,050 US dollars. An unbelievable return. We would definitely be living in a world where they would be writing stories about people like you saying, you got lucky. Can you imagine turning just $3,940 into $106 million? The exact same sort of thing we saw in 2017 when all the newspapers were taunting all those kids who were worth $100 million now that had only invested their $1,000 they got from their grandma, etc. Before I wrap this up, if you enjoyed listening to this episode, I would ask that you do me a solid and rate and review this podcast on your favorite podcast platform. A 5-star review would be fantastic, and that would be the biggest thing you could do towards boosting us in the search results. But you can also help feed that algorithm monster by making sure you're following us on Twitter. On Twitter, we are at BTC Bulletin Pod. Again, that's at BTC Bulletin Pod. My DMs are open, so if you can't afford to send a boost or a shout out, please DM me on Twitter and say hi, because regardless of whether you feel that we've contributed value to you that you would like to contribute back, the most important thing to me is I just love hearing from you. It's what makes it worth doing this podcast. I'm not doing this podcast to receive Satoshis. I'm not doing this podcast to sell sponsorships or to do commercials. I'm selling this podcast because I'm the person of my friends and family that will not shut up, that will not stop talking about Bitcoin. I love talking about Bitcoin. I'm that guy in my family, like you're probably that guy in yours. And so knowing that you're out there listening and hearing about what you think about the podcast, it means the world to me. So if you do follow us on Twitter, send me a DM, let me know what you think. If you're not following us on Twitter, by just following us at BTC Bulletin Pod, you'll help support the podcast by feeding that algorithm monster. And that will help potentially orange pill other plebs, because the higher we are in the algorithm rankings, the more likely it is somebody searching for Bitcoin content will find us. Maybe someone who thinks they're too late. Maybe someone who only has $100 or so to convert into Bitcoin that thinks that's too little, that they don't know that just $20 a week would add up to an appreciable stack of Satoshis. So by simply following us at BTC Bulletin Pod, maybe you can help orange pill that guy. And again, of course, I do love hearing from you, and my DMs are open. If you do not use Twitter and you'd like to reach out to me, you can do so at bitcoinbulletin@protonmail.com, at bitcoinbulletin@protonmail.com. I do have a couple emails I haven't gotten to in the last couple days because I've been really sick, but in general, I reply to all my emails. I do get a lot of spam. I get a lot of solicitations for altcoiners, S-coiners, etc. that want to appear on podcasts. I don't always get back to those because we're a Bitcoin-only podcast, but the point being, if you're a pleb and you want to reach out and say hi, I do respond to my email at bitcoinbulletin@protonmail.com. All right. That is all we're going to talk about today. Hopefully this was entertaining and listenable enough, despite the fact I am choking back a cough as we speak. But either way, don't forget to join us next Wednesday while we continue this Bitcoin journey, while we continue converting US dollars into Satoshis, as long as there's someone foolish enough to trade us their sats for cuckbucks. But either way, and until that time, keep on stacking those sats, you sexy sat stackers.